Welcome back. Today is June 17th. It's been, I think, 3 weeks since I last made a video, and there's a few reasons why. I was sick, I got a new kitten, and I kind of just didn't feel like there was that much to talk about for a while. But it's been, I guess a lot has changed in the last few days. So I think today is a good day to resume the series. It's Monday. And I wanted to talk about the new Tesla valuation model by ARK Invest, the latest with GameStop, and the updates with the Tesla shareholder meeting and the vote that passed that allowed them to give Elon his compensation. So right now, I'm up 10,000 now. This account is the Tesla option strategy. One thing that's changed is I own in quotation marks 233 GameStop shares in this account now. And as a side note, if you own GameStop shares in Robinhood, you don't actually own them because these are fake shares. But either way, I use this just to I don't know, have some skin in the game outside of the other accounts that I have GameStop shares in. And ideally, I might even try to swing trade this, which isn't really kind of not advisable, I guess you could say, but whatever. So I removed my cash equivalents from Tesla into GameStop. Obviously, today has not been a good day. They had a shareholder meeting just today where they said practically nothing of like major importance, and the stock just drove down 10% instantly, which is normal. Sarcastic, not actually. I've been depositing some cash into this account a little bit, so I try to keep about $10,000 in cash at any given time. I use Robinhood Gold just for the margin option, but I haven't used margin, and I don't really plan on ever using it unless I think it's just like, I don't know, super good opportunity. And I was thinking about how this account's doing, and considering about 10,000 of this account is kind of just floating around, and I've contributed another, I don't know, however many $1,000 here and there. Paying up 10,000 for an initial investment of, let's say it's about 20,000 is pretty good. 50% return over the course of 6 months. Most of that was actually just from that 3-day pop from Tesla recovering from their 144-ish lows after they had earnings. And then it's been doing pretty much nothing for like 3 months. Hence why I haven't been making videos as much. Side note, if you're new to investing, one of my best pieces of advice is when in doubt, do nothing. And the reason why is because the more you mess things up, or the more you touch it, the more you think you're going to make a good decision, chances are you probably won't. Most of the time, the best investors are the people that just let their investments sit there and do nothing. And indirectly, it does everything for you. There's a reason why it's called passive income. Even if I'm using option strategies, most of these don't expire for about a year anyway. Almost exactly a year, actually, for this biggest position. So I do have some time before I have to choose what to do with those whatever it's called, positions. So let's see, Fear and Greed, 43. I guess it's gone down again. Not exactly sure why, because S&P is already back at all-time highs. So it is what it is. My sendometer, I'm still at 60%. Last time I did this was episode 5 about a month ago. So nothing's really changed there, except for that I'm a little bit more bullish on GameStop than I've ever been before. And let's see, so ARK Invest is Kathy Wood's ETF investment company where she invests in disruptive innovation. And my personal opinion is that she's gotten she's made a lot of bad calls recently, like horrible. But the one thing that she is without a doubt the best in the business at, and not just her, but her company, ARK, and all of her analysts, is Tesla valuations. So they came out with their 2029 price target, and their 2029 price target for Tesla is $2,600. And if you look at what Tesla is trading at today, it is $186. So they're pricing in, or they created a Monte Carlo simulation, kind of like what I had, but far more intricate and complex. And they gave this distribution of price outcomes with the rough average being 2,600. So that's insane. A 14-fold increase from where we are today in 5 years. That's extremely uncommon. And so I believe, I'd say like I'd probably lean closer to maybe like the 25th percentile of this expected value Monte Carlo simulation range. So I'm looking at, let's say, call it 2,000 personally for realistic outcomes. But there's a good chance that Tesla does actually outperform the bear case scenario if robotaxi and AI progress at the same speed that they've been progressing, and they continue to exponentially. And you can see that in this light green, most of the valuation is in the robotaxi model. So without going through all of that, I don't want to. I just wanted to share my expected value calculator with this ARK Tesla valuation scenario and show you why this option strategy is so high risk, high reward. So the year today, let's say we start in 2024, and for this account, I have approximately 20,000 in Tesla options. I believe it's a little higher, actually, technically 26,000. But let's say I started with 20,000 because I'm up like 10,000 already. So in a year, if we say that this price target of 2,600 happens, we don't know what it's going to look like to get there. It could go up, down, and then way up at the end, or it could go in a mostly linear line, which it almost never does. Most of the time, like I said a long time ago in one of the older episodes, stocks typically go up really fast and then trade sideways for years. And then they go up really fast and they trade sideways for years. And then they go up really fast and then they trade sideways for years. So I would expect it to look a little bit more something like this, but maybe with a little bit more zigzags and then like a big spike at the end. And either way, if we just make some very broad generalizations, you can see generally what this option strategy returns every year. So if Tesla stock gets to 400 in 2025, so let's say that's roughly in maybe not exactly 12 months, but maybe in like sometime around January to March, then you're looking at a 1,000% ROI on the options calls. And the reason how I got that number is if you look at Option Strat website, this is actually the exact position I have, a 420 call June 2025. You can see roughly around $400. You'd be sitting somewhere around 1,000% ROI. Obviously, it gets lower the farther into the future it is, but generally, if you, let's say sometime in February-ish, you get to $400, you're looking at about a 920% return. So that would be roughly a 10x from your starting position. So I say, like, hypothetically, if this scenario actually happens, I would probably put most of the money into Tesla stock and then put about 50 grand back into options, because the idea is that you're trying to build wealth. You're not just trying to put it all on red like over and over and over again, because in the one chance that you're wrong and you lose everything, you can't really just like start over again. Well, you'd have to completely start from scratch is what I'm saying. You like, all it takes is losing 100% one time and you're down to zero. So I think putting in 50 grand every single cycle, if you want to call this option strategy a cycle, is reasonable. So, okay, so then the next year, 2026, we put in 150K. We start with 50K. Now the Tesla price is $800. This isn't even perfect math because there would be a time in between here, but whatever. So same thing. If you 10x your option strategy, you would go from 50K to 500K. And also simultaneously, while you have your money in shares, you would go from 150 to 225, which basically takes 150 divided by the 800 price of one share times the 1200 price. And then we repeat the cycle again. So pretty much I just created a super like stupid but insightful model to show you what this option strategy would look like in the case of this ARK Tesla valuation scenario actually happening. So in the final scenario, I said this would be a 20x because going from 1,600 to 2,600 is bigger than going from any of these increments. And so anyway, so you can see that if you keep taking out all but 50,000 into options and then keep rolling that option strategy for the next cycle over and over every year, if this valuation actually happens, you would end up at about $2,100,000. So I used that number divided by 20,000 to show you that would be a 104x increase. This number here would be the actual share price divided by the initial share price of what it is today. So you're looking at a 14-fold increase. So this option strategy is approximately whatever 104 divided by 14 is, like 7 times more high risk, high return, whatever the word is you want to call it. And as a control group, you can see the cost of, or I guess the value of 20,000 in shares in 2029 if it 14x's. So that was a lot of gibberish, but either way, I think this is insightful for Tesla. Also, Elon Musk, so they had the vote pass on June 13th. Thank God. The Delaware judge, it's stupid. Like that, I still can't believe that actually happened. A judge just overruled millions of investors siding with the guy that has 9 shares, and then the lawyers wanted $6 billion in fees. It's like the most blatant show of corruption. That's why they left Delaware. Delaware sucks nowadays, I guess. Also, I think it was either on the 13th or the 14th, Elon had his speech for the shareholder meeting, their annual meeting, and it's a lot of good stuff. I guess Wall Street doesn't really price in what Elon says anymore because he's a bit of a hype beast. He kind of says things that take too long for analysts to see to fruition because they're short-sighted. But either way, if you watched it, you know what I'm talking about. AI kind of just changes the valuation model completely. It makes everything look ridiculous. Okay, yeah, so here's the price chart here. Nothing crazy. The last thing I want to say is GameStop. So GameStop recently had 2 share offerings where they raised roughly $3 billion. So as of today, June 17th, 2024, they have approximately $4 billion in cash. This guy, Kevin Malone, he's a wealth manager and he's generally bullish on Tesla or on GameStop. He says the PC ratio for GameStop is 2.5, lowest ever. PC, I believe he means the price to cash ratio, not the put to call ratio, which roughly aligns with the actual valuation of GameStop right now, which is about 10 billion. So 4 times 2.5 is 10. So I'm assuming that's what he's talking about. If you look at a normal so this would be a PCF ratio, technically a price to cash flow ratio. Online, it looks like 15 to 20 is acceptable and anything less than 15 is considered undervalued or good. So here, basically, what's a good PCF ratio? Anything below 10 is good. GameStop is at 2.5. So basically, when you buy a share of GameStop, you know that approximately 4/10, so 40% of your investment is literally just cash. That's like kind of unheard of, actually. For example, like Apple sits on about $200 billion in cash at any given time, and their valuation is $3 trillion, right? So that's, what is that, 15x, like a 15 PCF ratio. So if you just look at the fundamentals of GameStop alone, it's definitely undervalued. The thesis for the short squeeze of GameStop has not changed. And we've seen a lot of chaos in the last few weeks. So I did sort of swing trade this a little bit, made just like a tiny bit of money, but not that much. And then I did buy more shares for long-term holding to not sell. Once again, if you hold GameStop shares in Robinhood, you don't actually own them. Robinhood is sort of a scam, but it's the best platform for option trading. So you can see here, if you look at the volume, which is this kind of like sort of translucent vertical bar graph thing overlaid with the actual price chart, the overall volume on this weekly chart is still pretty low relative to what it was in 2021. which is incredible because we went from basically $10 up to 64 and the volume wasn't even that high. So hypothetically, if this volume gets to this amount up here, you would be, I mean, that would be like some ridiculous number. The closest analogy we have for any kind of monumental short squeeze is the Volkswagen short squeeze in 2008, where I don't want to say anything incorrect, but generally Volkswagen became the most valuable company in the world for a brief moment. And that was only with approximately 20% short interest. GameStop unofficially has well over 100% short interest. So hypothetically, if GameStop ever did squeeze and it did become the most valuable company in the world, let's call it 3.2 trillion, which is Apple today, then the price, one share of GameStop would be worth approximately $9,000, because you would basically take the market cap of today, divide by 25, other way around, 25 divided by that, yeah. Anyway, you'd do a quick arithmetic that my brain is farting right now, and you'd find to the share price would be approximately $9,000. So anyway, my two investments are Tesla and GameStop. Those are the two things that I'm most bullish on, and I believe that Tesla is the more safe strategy for playing the game how it's supposed to be played, and GameStop is the more risky strategy for trying to play the game by breaking the game, because GameStop is the perfect microcosm of everything that's wrong with the financial system. So either way, if I'm right with Tesla, then I win by playing the game the right way. If I'm right with GameStop, then I win by destroying the financial system just because I like the company and I did nothing wrong. Wall Street did everything wrong. There's a lot to unpack there. If you're not following along exactly on what's going on with GameStop, then you can maybe just disregard that. But so that's it for today. Let's see, how long was this video? 17 minutes, pretty long. I think for the first time in a month, not too bad. And yeah, maybe I'll see you next Friday. We'll see. But otherwise, have a great day. Thanks for listening. Bye. Feel free to subscribe to stay tuned for future video tutorials that I'll be releasing soon, and to follow along with me on this journey. Follow me on YouTube, Instagram, and Twitter, or X, or visit lifewell.co for more information about investing. And as always, I'll see you next time.